Happy Tuesday! There is a buzz in the air around the Internet Computer Protocol as recent data reveals some exciting trends within its ecosystem. From shrinking exchange-held supply to rising address activity and impressive revenue growth, ICP is showing potential signs of long-term bullishness. Let's take a closer look at the latest developments and what they could mean for the future of this network. The Internet Computer Protocol ecosystem is witnessing significant activity, with notable drops in exchange-held supply and increasing accumulation trends. Recent data highlights a fascinating interplay of metrics, indicators, and market behaviors, suggesting potential long-term bullish signals for ICP enthusiasts. Now, let's have a look at the exchange supply dynamics. Since early December, the supply of ICP on exchanges has seen a marked decline. While short-term price correlation remains tenuous, historical data for Bitcoin underscores how dwindling exchange supplies can lead to price appreciation over time. The current ICP exchange supply is notably less than 10% of its circulating total. It's a smaller proportion compared to Bitcoin, which hovers around 12 to 13%. The trend mirrors Bitcoin's trajectory, where exchange-held supply has dropped significantly from over 3 million to less than 2.5 million coins within a year, indicating increasing scarcity. Similarly, ICP is showing a steady accumulation pattern with both retail and large-scale investors withdrawing coins for cold storage. Active addresses within the ICP network have been steadily rising since October. Peaks aside, the trend points towards broader engagement, with more than 4,700 new addresses created on December 24th alone. This growth isn't limited to casual users. Addresses holding significant ICP balances are also on the rise. Smaller holders and mid-tier investors are also accumulating, further reinforcing the positive trend. ICP's revenue metrics are a standout success story, with quarterly fees skyrocketing by over 50 times year-on-year. From a modest $75,000 in Q4 2023 to nearly $4 million in Q4 2024, the network's fee generation is accelerating as demand for computation grows. Burn activity is a critical indicator of deflationary pressure, which also reveals a promising trajectory. After a significant spike earlier this year, weekly burns have stabilized at a higher baseline, suggesting consistent demand for network services. When comparing ICP to competitors like Avalanche and Near Protocol, ICP demonstrates superior revenue generation relative to its market cap. December's revenue for ICP stood at $1.8 million, outpacing Avalanche and Near Protocol, even though both competitors have larger market caps. Despite these promising metrics, challenges remain. The total value locked for ICP has increased 20 times since 2023, but this figure still lags behind expectations. Sentiment around altcoins remains neutral, and price action for ICP has been relatively lackluster. That said, ICP's unique tokenomics, which align with its increasing demand for computational services, which present a compelling case for long-term growth. As the network continues to expand its use cases, including AI integration and large-scale decentralized applications, the fundamentals suggest a bright future. The boredom permeating the altcoin market doesn't reflect the underlying momentum within the ICP ecosystem. With whales, retail investors, and mid-tier holders all actively accumulating, and with revenue metrics showcasing consistent growth, ICP's prospects look robust for 2025 and beyond. Investors seeking undervalued opportunities may find ICP to be an enticing choice as it positions itself for the next wave of market enthusiasm. As the ICP ecosystem continues to evolve, its fundamentals, backed by growing demand for computational services and an active accumulating community, which paint a promising picture for the months ahead. Keep an eye on these trends as they could signal a significant shift in the market. Thanks for watching, and make sure to stay tuned for more updates.